You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. Happy Tuesday. So, how's tariffing over today? Are you all right? Have you survived? Like, how do you feel about your portfolio? Actually, just go on YouTube, search for the Dividend Guy, and just let me know, because this podcast is on Spotify, Apple Podcasts, but also on YouTube. So let me know how you feel about those tariffs. The reason why I am not yet covering the tariff on this show or anywhere else is we're just getting started with tariffs. And I'm actually working on a major piece for my DSR members because, DSR members unfortunately have to come first. And that will be a complete piece that will be completed next week. So if you're a member, I am working on something very interesting. But just to show you how crazy this story goes, before we get to today's topic, which is CNR and CP's earnings results, which is like kind of tied in with the tariffs, because as tariffs are put in place, of course, that will affect transportation of goods. And while two largest transportation of goods are like railroads operators, right? So anyways, just to show you, like, I've recorded this podcast yesterday around 4 p.m. And yet at this point, what we knew, and I'm still don't know like what's going to come up in the next coming minutes, but I'm just like waiting before recording this. Mexico got like 1 month off tariffs, so they had like a little bit more time to adjust and try to find like solutions or whatever. And for Canada, we still don't know. So as you can see, there is a flow of information that is going to keep on coming and changing and alternating, and it's just going to be crazy, and it's going to be like that for 4 years, my friend. So just better get used to it now and not trying to jump the gun right away on any kind of piece of information, because we don't know what we don't know, and we don't know a lot these days. So anyways, long story short, I'm working on something that is coming up for my Dividend Stocks Rock members. They will get it next week, and at least we're gonna get a little bit more meat to chew on to see what's going on. In the meantime, let's take a look at Canadian National Railway and Canadian Pacific Kansas City, the two largest railroad operators in Canada, one of the largest railroad operators in North America. So let's start with CNR. CNR, weak quarter, to say the least. Revenue down 3%, adjusted earnings per share down 10%. Not looking good. I mean, it's not surprising. This CNR CEO has been saying that last year several times throughout the quarters. So we're ending up the year pretty much the way we started in 2024. So the fourth quarter is not getting any better. So revenue down mostly due to lower volume across intermodal and automotive shipments. When you think of tariff, it's going to be even worse, right? So what's going to happen with tariffs is that we're going to see a slowdown of importation, right? So, I mean, on the U.S. side, so the U.S. will probably buy less stuff from Canada, and then therefore transportation services such as railroad will take an additional hit. So it's not looking that good moving forward for automotive. That is already down at this point. Besides that, maybe a little bit more on the good news, though. We had a grain and fertilizer segment that was up 4% versus last year, while petroleum and chemicals was up by 1%. So a little bit better on that side. Again, we kind of expect that it's going to be a tough road ahead for 2025. The the company also reported the earnings per share that was down 10%. Most of it comes from the fact that the operating ratio went from 59.3% up to 62.6%, so roughly like 3% more. What is the operating ratio? It's a key ratio that you have to monitor if you hold any railroad operators, and it kind of like tells you how profitable the company could be, because on one side, keep in mind this business model is capital intensive, so it costs a lot to maintain railroads and maintain the trains and so on. But so you want to minimize your cost of operation to maximize your profit on the revenue you make. But at the same time, if you cut too much on cost and your operating ratio is too low, well, then yes, you're going to make more profit short term, but over the long run, you can run into more problems. So having an operating ratio around 60%, 59% is healthy. Above that, it's not the end of the world, but of course it affects the earnings, which was exactly the case in this quarter. On the good news side, at least the company increased its dividend by 5%. Now we are at 88.75 cents per share. So nice increase, not super big, but considering the current market, I would say that it's not the end of the world, and it's probably good news overall. Of course, yesterday the market did not react very well based on the tariff that were announced during the weekend. So we saw CNR ending the day down by 5%, which was definitely not good news. CP, Canadian Pacific, down 5.70%, so not really better. Ironically, over the past few days, the company also reported their earnings, and they were not incredible, but they were better. The revenue increased by 3%, and adjusted earnings per share was up 9%. And it's great now because now we have all the metrics, including Kansas City Southern. So for a year, we had to go through a long list of adjustment and to include the integration of this new railroad operators. Now everything is combined, so that's great. So revenue up 3%, EPS up 9%. The revenue increase was driven by a good performance from grain, automotive. So it's kind of ironic, while CNR struggled with automotive, it was positive for CP. Energy, chemicals, plastic segment. So hopefully we're going to see more of that going forward. Unfortunately, intermodal and metals, mineral, consumer products declined slightly, but overall was not an amazing quarter, but a lot better than CNR. CP's earnings jump by 9% was, of course, fueled by higher revenue, but also improved by better operational efficiency and cost control. So operating ratio was better for CP than for CNR. So another good news. In the dividend growth department, nothing new. Actually, the last increase was 5 years ago in 2020. So don't necessarily expect any dividend increase anytime soon. The company focused on the integration of Kansas City Southern, and they're buying back shares. So they have a different capital allocation strategy. That doesn't make it a bad stock. Actually, it did perform better than CNR over the past few years, but it doesn't make it a dividend grower. So at this point, is more about what you find the most important thing in the railroad or any type of investment is just like what really matters to you. If it's the dividend increase, well, then CP is probably not a good candidate. But if you prefer a company that does other things with capital allocation, such as buying back shares or making an acquisition, paying down that debt later on, well, this is what CP is doing. In the end, both companies have like a similar business model, similar moat, very well protected, because it's really hard to replicate this business model anyway. So long story short, Two great investment for the long term, but short term, it's going to be a rocky road. By the time I was actually recording, I was like going from like one place to another, and then I saw that we got that 1 month break that Mexico had. Same thing for Canada, so not too sure how the market will react tomorrow, but just to show you how crazy it is. So don't try to follow this daily, because you're just going to be on that roller coaster ride every single day of emotion, not feeling good about it. I don't think so. And it's going to be more distraction than anything else, more noise than anything else. So as I said, I rather wait to get real numbers and real fact. Now we're still on the fence about what's going to happen next, and it's likely the playbook that is going to be running for the next 4 years. So anyways, in the meantime, I'm going to continue to do my research. I'm going to continue to see what are the possible implications, working on that tariff guidelines for dividend stock members. So don't worry, it's coming up. Yeah, so tomorrow we're going to talk again about the market. It's going to be an exciting quarter, to say the least. And yeah, so tomorrow I want to discuss yield max, so ETFs. So you know those ETFs that are linked to popular companies and are offering crazy yield. So we're going to take a look at those to see what's going on with them. So all right, Moose, that's enough for today. We're going to talk again tomorrow. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to the Moose on the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.